Welcome back to this Money Control live stream. You're watching Closing Bell with me, Nandita, Khemka, and my colleague.
Hello there, I'm Yatin Motas.
Well, Yatin, nothing to complain about, although it was a fairly quiet session after the one-way vertical move that we have seen in the market. Nevertheless, it was a 6th straight session of gains. In fact, the Nifty ended above that 24,100 mark, longest winning streak in over a month. In fact, if you talk about the last few sessions, Yatin, in about 7 to 8 sessions, the Nifty has, rallied somewhere around 7 to 8%. And the Nifty Bank continues to clock new record highs. In fact, came very close to that 56,000 mark as well today, Yatin. 55,960 odd. That's the kind of record level that the Nifty Bank index managed to hit today. Nevertheless, 0.2% kind of gain on the headline indices, but the broader end of the markets continues to outperform. 0.8% kind of a gain on the mid-cap index, small-cap index, similar performance. Advanced decline ratio firmly in favor of gainers. Breadth of the market has, of course, improved in the wake of the one-way move that we have seen in the market over the last few sessions. If you talk about the sectors, I think most of the sectors were in the green today. Realty was the top performing sector, almost a 3% gain coming in there. FMCG participated, Yatin. Good report coming in from UBS. We'll take stock of that, but in the wake of that, we had some FMCG names participating, although yesterday they were sitting out of the up move. Barring IT, all the sectors ended the day in the green. IT saw good gains yesterday, but follow-through buying didn't really come in today. So the likes of Infosys were under pressure. But in terms of individual movers, then as I mentioned, FMCG was doing well. So ITC, HUL, these were among the top gainers. M&M as well. Featuring on the list of gainers, and HDFC Bank, hit a fresh 52-week high. The market cap crossed that 15 lakh crore rupee mark. The third Indian company to achieve that milestone after Reliance Industries and TCS. So that was one top winner, and Jio Financial was the other one that was gaining. On the flip side, Indices Bank, Yatin, top Nifty loser, 5-6% kind of a loss. But mind you, the stock has seen a good recovery in the recent past. Stock has seen a very strong rally, but there's a second forensic audit that will happen, now with respect to its MFI portfolio, which is why the stock saw some bit of selling pressure. Power Grid, Hero MotoCorp was among the laggards, two-wheeler space. Some names like Hero MotoCorp, have been downgraded, by Jefferies. We'll talk about that. Infosys, Wipro, these were among the laggards. But Yatin, although the headline indices were quiet, range-bound, quite a lot of stock-specific moves in the market. Wealth management companies were under, in fact, in the limelight today because of the deal between 361 and UBS.
Yes, that wealth management deal clearly moved the stock of 360 WAM, high by nearly 7% intraday. Last 1 hour of trade was quite strong for that particular stock. But, market per se have been doing well. The mid-cap index almost 0.75% higher. If you look at advanced decline ratio also, it was much better at 2:1. Now, barring IT, I think most of the sectoral indices ended in the green. If you look at stocks like Data Pattern, that stock was up nearly 9%. Vari Energies, obviously, there has been talks of US anti-dumping duty on Southeast Asian countries and South Asian countries, which clearly mean that India would stand as a beneficiary point. Especially Vari also has a manufacturing facility in the US that clearly does well. We had stocks like Chola Finance witnessing profit taking, 6% down for that stock. Just Dial after the 10-12% move yesterday, 4% profit taking there. RK Forging, Techno Electric were the other stocks which saw some bit of profit taking in trade today. But stocks like Laurus Laboratories, Kim's, Avas, JK Cement continue to hit that 52-week high. And obviously, as you were saying, brokerages, exchanges, since the market has returned, about the 24,000 mark on the Nifty, clearly we have all of these capital market stocks doing well in trade.
Another reason, Yatin, the banks were rallying was the fact that RBI has eased the liquidity coverage ratio norms. So on the back of that, and of course coupled with all the rate cuts and deposit cuts and good numbers, banks continue to charge ahead. But even steel companies and metal companies were in focus. Yatin, saw good traction given the fact that the Indian government has imposed a 12% safeguard duty. That was anticipated, and analysts do say that it was already in the price. But of course, the ongoing negotiations between India and US on a trade deal, that that is something that would move the needle, so to say. But whatever impact we saw today was sentimental, so to say. But another pocket that was in focus today was the auto pack, and particularly the two-wheeler basket, given the fact that there's a report from Jefferies, they have downgraded two stocks, Bajaj Auto, to hold. Target price has been cut substantially, Yatin. 28% target cut for Bajaj Auto from 10,550 rupees to 7,500 rupees. For Hero MotoCorp, it's a double downgrade to underperform from buy, and here the target price has been cut by 37% to 3,200 vis-a-vis 5,075. Talking about other auto names as well, Eicher Motors, here the rating is a buy and the target price has been raised to 6,700 from 6,600. And for TVS Motor as well, buy recommendation and the target price has been raised to 3,225 vis-a-vis 3,050. Now, Jefferies has, shared its rationale also behind these downgrades. It has pointed out that the competition landscape is changing substantially for these two-wheeler makers. And volume growth, in terms of volume growth, Bajaj Auto and Hero Moto have lagged behind, which is why they've also cut the EPS estimates. In fact, if you talk about the overall two-wheeler space, they expect volume growth for FY26. They have in fact cut volume growth estimates for FY26 by 6% and for FY27 by 2%. But they are expecting a healthy 10% compounded annual growth rate over FY25 to FY28. The domestic market share for TVS Motor hit an 18-year high. Jefferies has pointed out. But on the other hand, if you look at Hero MotoCorp, the domestic market share has hit, in fact, a 20-year low. Even when it comes to exports, for TVS, it is fairly good. For Bajaj Auto and Hero MotoCorp, the FY26 and FY27 EPS, estimates have been cut by 5 to 11%, and that's because of the low volumes. Aside of that, for TVS Motor, the FY26 to FY27 EPS estimate has been cut by 2 to 3%. They are saying that volumes here were also low, but it will be partly offset by the PLI benefits that TVS will get. Industry at large is expected to grow at 8% in FY26 and 11% each in FY27 and FY28. Talking about the competition landscape, of course, you can see the divergence between market share of a Hero and TVS. That's the impact of competition. But there will be some bit of indirect impact of the tariff announcement, the 25% tariff that was slapped by US on Indian automakers as well. No direct impact. For Bajaj Auto, the impact will be minimal because exports to US only account for somewhere around 1 to 2% of total exports. But the big point is the fact that Mexico is one of its top export markets, and here, both in volume and value terms, it is a big export, large, overseas market for Bajaj Auto. So how things pan out for Mexico in terms of tariff and the currency movements and economic developments there, that will have some bit of an impact on Bajaj Auto. For Eicher, it will be affected by the new tariffs as well, because it is an important market for Eicher's 650cc motorcycle, which is quite popular in America. And with these new tariff, of course, those motorcycles may get expensive, and which may hurt demand. But I think Hero Moto will be largely unaffected by the tariff announcement. So, yes, all in all, things are going to be dynamic, and competition landscape has been quite intense, which is why I think these downgrades have come by from Jefferies for some of these auto names.
Absolutely, and the auto company is clearly under pressure. Hero MotoCorp, they're down nearly 2%, and one of the top underperformers in the auto pack. Obviously, the overall sales momentum has been slow for the past 2-3 months when it comes to Hero MotoCorp vis-a-vis the other auto companies, which haven't done really great. But yes, there has been growth concerns for Hero MotoCorp. Moving, from autos to consumption, and here clearly we have a UBS report which has, highlighted the fact that from here on we could see some improvement in the consumption pattern across the board. Now, we have UBS, which believes that from here on the earnings recovery will take place in FY26 with a 13% growth expectation. FY25 was quite muted for FMCG companies, and hence, with a lower base, probably the growth will look higher. Also, additionally, we have the stimulus on the income front, because we have the pay commission revision which will happen by the government. So the government employees would probably get extra funds in their hand, which would obviously demand some bit of higher consumption in terms of discretionary spending as well. Valuations according to UBS from the peak of October 25 have corrected, October 24 have corrected nearly 35%, which probably is more comforting. In terms of stock ideas, they have a preference buy on DMart as well as Trent. Probably the kind of retail value chain and direct impact that they have on the middle class would probably drive the valuations as well as the upside here. When it comes to Colgate Britannia, they expect that the revival is likely next year, and they see appealing value in ITC because there has been no budget taxation, as well as the kind of acquisition ITC is doing. The FMCG strategy that they have done is working well. And finally, Jubilant Foodworks and Dabur, these are the two stocks which are clearly a no-go when it comes to UBS's FMCG report. So these were the two stocks which clearly were under pressure in trade today. Barring all of that, we have the FMCG stocks which did well after this UBS report on consumption.
That's true, Yatin. Also the fact that there are predictions of good monsoon, which will drive volume growth for some of these FMCG names which have been grappling with slowdown when it comes to volumes. So yes, that pickup is also expected to happen in FY26, aside of all the tax benefits that will flow through. So yes, FMCG and consumption basket per se really in focus here. But so is Chola Investment, Yatin. The stock was down 6% today. There's been a downgrade from CLSA, wherein they have downgraded the stock to hold. Target price is at 1600. Now the stock has slipped below the target price in today's session. It closed somewhere around 1560 rupees or so. So 40 rupees below the target price of 1600 that has been, set by CLSA. Now the CLSA has given a rationale saying that, the stock is trading at fairly elevated valuations. It is trading at 4 times price to book, which is just about at a 9% discount to the market leader, which is Bajaj Finance. And historically, the stock has rarely traded at such elevated multiples, says CLSA. Only in periods where their asset under management was growing at, in the range of 30 to 40%, that's when we saw such elevated valuations. But currently, the AUM growth stands at, somewhere around mid-20s or so. And they are expecting an average of 18 to 20% kind of a compounded annual growth rate over the next 2 years. But they've also pointed out that the company is well positioned to benefit from the rate cut cycle. Of course, RBI has already cut rates by 50 basis points in the last 2 meetings, and an additional 25 basis point rate cut will enhance the net interest margin by as much as 7 to 8 basis points, and the EPS will be, in fact, enhanced by somewhere around 2% or so, according to CLSA. And the management has also earlier said that it is aiming to achieve 20 to 25% AUM growth and profitability over the next 2-3 years. But the stock has seen a very good run, even in a volatile market, all the tariff announcements and how the market reacted. Despite of all that, the stock has gained in excess of 30% on a YTD basis, in tandem with all the other NBFCs also. I mean, NBFCs and banks, they have been doing well. But this stock, on the basis of its elevated PE multiples, it has kind of been struck by a downgrade by CLSA, but otherwise the stock or the company is fairly well poised to benefit from the rate cut cycle that is ongoing. Yatin.
Absolutely, and Chola, there after this report has been down nearly 6%. So clearly the brokerage report these days have a larger impact on all of these stocks. Not liquid as well, but yes, given the fact that it is a well-priced stock, there have been concerns of valuation and growth, especially to do with the fact that now RBI has been strengthening the balance sheets of banks, probably puts them at an advantage versus the NBFC space.
True that, Yatin. So yes, the stock of Chola Investment down 6% below the target price of 1600 set by CLSA. But with that, we've come to the end of this edition of Closing Bell. Ending on a good note, so to say. Nothing really to complain about. It was another day of green.
Especially when the globe was down. We have the Dow Jones which corrected sharply. The Asian markets also clearly seeing some pressure overall, especially the Japanese market. So India probably now looks at a bright spot. And Nandita, for the last 4-5 trading session, the FI buying has also been improving gradually. So flows have been on the positive side. Also the currency as well as the dollar index are on India's side, which probably helps sentimentally to outperform other global markets.
Yes, and we have outperformed global markets, all the global markets, so to say. Even if you look at the last week or so, and even on a monthly basis, our returns have been in the positive. Well, with that, completely timed out. Thanks a lot for tuning in. But stay tuned to Money Control for all your other news and updates, and come back and join us tomorrow morning at 9 a.m. on Opening Bell. Thank you.